All right, hey guys, it's Alex from the War Room doing another nightly video for you guys. So I'm looking at Amazon again today. So Amazon had a really huge run, right? It ran about 95 points, actually probably more. I think it was like 118 or something at the top. All this morning. It was fantastic. So I know that Amazon has really big moves, right, up and down. So I was just waiting for an opportunity to short it, right? Once the momentum kind of slowed down, and I saw signs of reversal. So I'm going to show you kind of what I'm looking at here, right? So the green line is the 9 EMA, right? Moving average, short-term moving average. So it moves quickly with the stock price here. And the red line is the 20 MA, right? So essentially, what's something called a golden cross and a death cross. So when the green line crosses the red line, that's a golden cross. That's a bullish indicator, right? Just looking at these lines. And conversely, the other way applies too. So I'm watching Tesla do this really nice run, right? The squeeze fired here. So very bullish. I would go long, right? I would go long right here if I was watching Amazon. And then right about here, though, momentum started shifting. It started moving down, right? If you look at the RSI, which measures momentum, right? This going down is negative. That's a bearish divergence, right? Even though it's kind of flat. So I'm watching. It's consolidating. And then down here, the squeeze starts developing. Right now we have a squeeze again. And these bars are dark blue. Those are bearish bars, right? That means it's going down. So I'm watching. And then right here, we have 3 squeeze bars. Momentum is going almost to 0. RSI is still going down, right? And if you look, this is where the green line, the 9, crosses the 20. Right here is where the death cross gets created, right here of this exact candle. So on this one, I opened up a put debit spread. What I did is I bought the 35.40, so at the money, and I sold the 35.25, right? So it's called the put debit spread. It's a bearish trade. That means I'm expecting Amazon to go below 35.40 by this week's expiration, right? December 10th. So I put it on, it was about $7 when I put it on about 11:40 a.m. And by the time I sold, by the time essentially the trade was over, was at the end of the day, that thing was trading at about $8. So I made about $100 or about a 15% return in about an hour and 20 minutes. And if you look, right here, consolidating, but I got in, right? I got in when it was squeezing and it was showing weakness. And then right here, boom, that's where it made its move, right? The squeeze still here. And this is where the squeeze fired, down, consolidating. Okay, a little bullish momentum at the very end of the market, right? No big deal. Because by then it was already at a 15%, $100 profit per contract, and we were out of the trade. So some things to remember here is that when you have a squeeze, especially, and then direction is identified by these bars, right? Light blue is bullish, yellow is bullish, dark blue is bearish, and red is bearish. So when I saw the squeeze forming, I see the death cross forming, right? All these things, RSI going down. Those 3 things were confluent with each other. Confluence means they're all saying the same thing. And I see that after consolidation, Amazon got kind of exhausted, and the market internals like the tick, the ad incline were all going down as well. And you guys, I'll go over those in another video. So everything was pointing that this thing was going to go down. Now, I'm not saying here like long term, right? Like days, because the market is still very bullish right now. But on the short term indicators, this was a bearish indication. So I took advantage of it, scalped it an hour and a half for about $100, and hey, moving on for the day. Okay, so that's your trade of the day today. I will see you guys on Thursday. All right, take care.